The United States dollar, the world's most watched currency, is having a very rough time. It is heading for the biggest drop in over 3 months. The dollar has been on the downward trend since January of 2025, as I mentioned in my previous videos, you might recall. So this is not a coincidence. The dollar slide is raising deeper questions about global policy, trade, and even America's role in the world financial system. As central banks are preparing for critical meetings that are coming up in the next several weeks, and Washington is reconsidering its economic stance, the dollar's direction is more uncertain than it's been in years. The US dollar is trading near its 2-week lows. The dollar index, which measures the US dollar value against a basket of 6 major currencies, has dropped nearly 1% this week, marking its weakest weekly performance since early June. The drivers are a mix of anticipation, geopolitics, and market recalibration. Markets are holding their breath as they await next week's policy decisions from two major central banks, the US Federal Reserve and the Bank of Japan. While neither bank is expected to adjust rates immediately, nothing dramatic is expected to happen. Investors are actually focused on the tone of their messaging. This is so much about the tone. Will they hint at future cuts or hikes? Will they signal patience? So any shift in tone could move trillions of dollars in global capital. At the same time, the yen has surged this week. It increased 1%, and this is its best performance since May. This is largely because Japan just signed a trade deal, if that's what you want to call it, to its own detriment, of course, with the United States that lowered auto import tariffs to 15%. That deal effectively has markets believing that the Bank of Japan may finally be confident enough to raise interest rates later this year, something that many economists are now expecting. The European Central Bank held its key rates steady at 2%, which signals a pause in its year-long easing cycle. That decision, timed just days before a critical US-EU trade deadline, is seen as a move to avoid shaking markets while waiting for clarity from Washington. The euro, as the result, remains quite strong. It is sitting near $1.17. And of course, that is just shy of its 4-year high earlier this month. It is up more than 13% this year alone, believe it or not. And of course, it is powered by a weakening dollar. Back in Washington, the dollar's fate is also being shaped by an unusually tense relationship, and this is something that I can't help but mention, the relationship between President Trump and Federal Reserve Chair Jerome Powell. In a rare and symbolic move, Trump visited the Federal Reserve on July the 24th, but it wasn't to praise Powell, of course, it was to criticize him. Trump slammed the Fed's spending on renovations and once again pushed for lower interest rates, arguing that rate cuts are essential to sustaining America's growth. But markets largely ignored his visit to the Fed. They didn't react. They basically just shrugged it off. It seems that there is a fair degree of less reaction to what Trump says and to what Trump does these days. At the end of the day, everybody understands that Trump's Fed visit was spectacle over substance. Powell is expected to maintain his data-driven approach. He's staying non-committal on rate cuts, while at the same time he's saying the Federal Reserve is quite flexible, it is going to remain flexible, and it will act based on economic data. That is very much in line with market expectations. The Fed is likely to hold its benchmark rate steady between 4.25% and 4.5%. So the big question now is, why is the dollar falling? What is going on with the US dollar? There's one good reason. First, it is tariffs. As the US raises import taxes to protect domestic industries officially, it is creating inflationary pressure and it is dampening growth domestically. Well, ironically, this makes the case for rate cuts stronger, which in turn weakens the dollar. There is the second reason that I would like to bring up too. The second factor for this is sentiment. A weak dollar makes U.S. goods cheaper abroad, which boosts exports, of course. It increases exports. And that could be a potential short-term win for Trump's trade agenda. Some officials even hint that this might be strategic. Commerce Secretary Howard Lutnick said last week that a falling dollar, quote, could soften tariffs completely. But there is tension inside the administration. Trump remains in the strong dollar camp, recently saying, "I'm never going to let the dollar slide." His main concern might be that a weaker dollar could raise prices for American consumers and effectively undermine U.S. leadership in global finance, which is a quite logical conclusion to make, I would say. And that debate goes far beyond next week. And that's really the most important thing to keep in mind. The dollar is down nearly 10% since Trump returned to office, a 10% decline since January. Some people worry that this could signal a loss of global confidence, and many believe that this is exactly the reason why the dollar has been on the downward trend. JP Morgan CEO Jamie Dimon warned, if people decide that the US dollar isn't the place to be, that will become a problem. Well, of course it will. SMBC Group says fears of a long-term dollar slide are overblown. While speculative investors may be bearish, actual capital flows, they say, still favor U.S. assets. And Apollo Global Management believes that once trade tensions cool, demand for U.S. dollar and U.S. bonds will return. That remains to be seen, of course, as the trend is clearly a negative one, and there is really not very much of a positive direction that we've seen lately. Even within Trump's team, views do diverge. Some, like economist Stephen Myron, for example, argue that the dollar is persistently overvalued and that it needs adjustment to support U.S. tariffs. Others, like Treasury Secretary Scott Bessent, insist that recent moves are normal and they're not cause for concern. So where does that leave us? The dollar's current quite dramatic slide may just be a short-term response to policy uncertainty and to shifting expectations. That to me seems quite unlikely. I would say that this is a reflection of a bigger, more complex global recalibration, one that is shaped by trade, flip-flopping on economic policies, central banks, political friction, and investor sentiment. What happens next will depend not just on interest rates or tariffs, but on how the US defines its economic strategy in a world where confidence is everything and currencies move with every word spoken by a central banker or president. So let me know what you think about the US dollar movement. Do you still have faith in the US currency, or do you feel that it is definitely losing that level of confidence that it once used to enjoy? Let us know in the comments below. Either way, we would love to hear from you. Thank you so much for watching. If you found this breakdown helpful, like, subscribe, and share, and I'll see you back here tomorrow. Bye for now.